We're not so exactly boring, are we, today, because the news is pretty extreme. How do you advise your clients with the Ukraine going on, of course, the Chinese attacks again, all these concerns about the markets themselves, commodity prices? What do you say to your clients this morning?
Well, I say don't buy the dip at the moment. Let's wait for some clarity around this situation, because let's not be a hero and just try and buy this pullback that we've seen in things like the S&P futures, in euro, dollar, Aussie dollar, and these bits and pieces. Let's wait to find out exactly what happens. I like to wait for a bit of more certainty, because if we do see this ending in an all-out escalation and then sanctions being imposed on Russia from the West, we could see this market trade markedly lower from here. So I think it's a question of just not buying this dip right now. Let's wait and to see what happens with clarity. Let's see what happens with this whole week, to be honest. I mean, we've got something up for bottom-up stock pickers. We've got something for top-down macro watchers as well. There's pretty much whatever geography you're looking at. There's huge news this week to focus on. So we will hopefully get a clearer picture by the end of the week. I'm just saying stay clear until clarity prevails at the moment.
And, of course, on Friday's the US jobs figure out 150,000 being forecast. But you're saying, actually, Japan is an issue, but Australia, where you are right now, is an even bigger issue. Why is that?
Well, I just think if you look at some of the predictions for terms of trade coming forward, I think that's something that's not factored into forecasts. If you look at the capex numbers we saw last week, that was a big drop-off, and it's clear that even the radical loosening of monetary policy that's been taking place over the last year or so in Australia hasn't benefited anywhere near the tune that the RBA would like to see it coming through. China is very much a watch in space. I'm sort of neutral on China. I still believe that we're going to see 7.5%, so I'm not overly concerned about that side of things. We've just seen some data coming through. The operating profits, if you look at that was slightly below expectations. Inventory numbers slightly below expectations. That puts downside risk to the GDP number. And then, of course, we've got inflation. Inflation, I think, will peak in the second quarter and then slowly dissipate into the year end, with a lot of the tradables coming back under. So I think there's big issues to watch in in Australia. And I think just from a monetary policy perspective and the impact on the Aussie dollar, I think this is the central bank that we need to watch for the one that is potentially going to put their easing bias back on, and that will give a green light to traders to sell again.
So a rate cut rather than a rate rise is what's required in Australia?
As it stands at the moment, I think the swaps market, for example, has a very, very flat bias, and I think that's probably about right. But if we do see some of this data roll over, which I expect it to do, then for sure, I'd be sitting in rate cut camp well over rate hikes at the moment.
And Chris, interesting, I looked at a report this morning, and in fact, that even though the S&P has hit a new record high, the margin debt is at a record again in January, and clearly the money that they borrow to buy these stocks. How concerning or how alarming is that, if at all?
Look, I mean, it's quite alarming, I suppose, but we'd need something pretty sizable to create a big capitulation down, and obviously that would then exacerbate the fact that we're going to see lots of margin calls being placed on. But let's not forget, I mean, we've been seeing record levels of margin debt for many months now, and we've had everything being thrown at the S&P and the kitchen sink, tapering and geopolitical issues, and that situation hasn't gone through. So on the current news flow, I don't expect it to be a major concern. But if we did see something more radical coming through, which is a much bigger macro event, then, yeah, for sure that would be an issue which would certainly exasperate the selling and cause a bigger reaction.